Hey, good morning. How are you doing? Welcome to Forex.today. Today is Wednesday, August 9th, I think that is. August 9th, 2017, Wednesday. Nice. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, however good or bad, is not necessarily indicative of future results. If you stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne McDonald, Trader's Way. Trader's Way. My name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. Thank you for being a client. We appreciate you. We work hard for you. We want you to succeed, and that's my prime directive. This is my experience of trading over the last 15 years to help you get successful sooner than later. I do these sessions 7:30 a.m. Monday through Friday here at Forex.today. Every first Friday, I'm over at FX Street. We're trading on farm payrolls live, which I've been doing for almost 12 years. 136, 137 months in a row. Yeah. So anyways, let's get going. Check this out. I got knocked out of my trade. No! Time to kill me. So let's just go over this. I was long here, and I was long here, and both my stops for both the trades were about here, I think. So the market crashed, but I wasn't in it. I think I got 200, 250, something like that. So, oh well. Not surprising for this time of year. We talked about it, but at least I enjoyed some of the upside. Tried for one of these, and just didn't happen, or didn't happen yet. So Kiwi Swissy, I was double dipping on the interest payments. Pretty good. Picked up, I think, 20 bucks if I were to guess on the swap. But I think I had risked a couple $100, so whatever, almost 10% just on the interest. Something like that, whatever. So sad, huh? What else would you do here? Would you guys think about doing it again? To do that, you're going to need to find bottoms and tops. And so, you know, there's something going on here. And then you can see there's something going on here. And then the top kind of gets important. Oops, right? Am I missing anything? I mean, the higher one we kind of already have. So how do you want to play this, bro? Okay. I think this area here, oops. I think this area in here is pretty important. I don't really want to head any lower than that, right? Right? I wouldn't want to head any lower than that. In fact, I don't really want to head lower than now. Well, the problem with buying down here, though, Cream, is then it kind of looks like it head and shoulders. So what you want to do is you want to you really want our current bottom to be bottom. Okay? Okay? That's kind of what we want here. I don't really even want to be down there. So let's sort of mark this as another key area. Okay? I don't want to be anywhere in this yellow. Okay? See, if I'm down here, then it's 100% retracement, so there won't be a valid extension, so there would only be a false rally. Does that make sense? So in that case, it would come down to this lower yellow, come back up to this channel, which is the left shoulder, and then probably drop for a new lower low. Well, they're not going to raise interest rates tomorrow, but maybe they'll talk about the end of lowering interest rates. A lot going on behind me, huh? Morning. If there's reversal pattern in lower time frame, oh, well. Okay. The most important thing about the lower time frame is the higher time frame. So I don't really care what's happening on the lower time frame until I've made a decision on what's happening on the higher time frame, Brandon. So what does that mean in English? Does what's happened on the higher time frame tell you that this pair is reversing? If so, on the lower time frame, you look for confirmation of said reversal. You don't kind of mix them two. One gives you strategy, the other gives you tactics. Right? If you want all tactics and no strategy, just join the army. I have a friend that would just beat me dead if you heard me say that. All right. Join the Air Force. Oh, wait. I got another friend that would beat me dead. I can't say the Navy because I joined the U.S. Navy. Did you know that? Yeah, I joined the U.S. Navy. Back right after I finished with NASA, I signed up for the Navy to fly as a pilot. I wanted to be an astronaut. So I worked at NASA for 2 years. Boom. So, what's left? Coast Guard. If you want all tactics and no strategy, join the Coast Guard. Nobody, again, no one's going to yell at me for that, huh? Oh, shoot. All right, Pete. What's left, Pete? I can't say Marines. That'd just be anti-whatever. Shoot. Really? You catch any drug dealers? Yeah, right on, Pete. Actually, I know someone that's in the Army band. I know too many people. All right, I'll just keep my mouth shut. If you want all tactics and no strategy, just go ahead and trade the small time frames. Be a scalper. All right, so anyways. Life is great. Life is grand. Life is good. So that's that. That happened to me. Too bad, so sad. Really hoped it would pop. Honestly, I hoped it would. but I'm not surprised that it didn't, because we're at least 2 weeks early. So yeah, let it fall all the way down to here. I don't even really care. Let it fall. It's too bad. You got to take the shot because you don't know when. Have you ever gone to like the fireworks show? And they're like, oh, we're going to fire as soon as it gets dark, we're going to fire. And all the kids are like trying to time it perfectly. All right, is it ready to go yet? And you're like, well, it's almost 10. You'd think they'd be ready. And the kids start going, all right, 10, 9, 8, 7, but there's nothing. 6, 5, 4, 3, 2, 1. Right? Pete says, how did you take the shot? You saw me take it. I took these trades in the webinar. I'm like, oh, look, we're at support. It's oversold. Great. Want to be long. Fantastic. Looks like a rollover. Boom. So like this trade here, I took this with you guys. We all looked at it. I'm like, oh, look, it made a lower low. Where should you sell? Oh, how about the lower high? Great. Click. Short. Stop was up here. Great. Right? Like, trading most of the time should be easy. If it's not easy, then you're forcing it pretty difficult, right? So you and I and everybody else, we put a line in the sand here on the roll reversal, so I sold it. Right? You have a stop there. You can move it to BE if you want. It's either going to break or it's going to reverse and go higher. So I don't mind. It's a little early, but there you go. Yeah, plausibly, Oren. I don't know. Okay. So what you guys need to do, and I always assume you know this, so it's good that from time to time maybe it's apparent you might not. You need to develop a strategy first, strategy based on fundamentals and long-term technical analysis. And once your strategy is set, then you go to a smaller time frame with your tactics and you trade in that direction. So a strategy can simply be the market is bearish. Would you agree that on a 4-hour chart you could come to that conclusion? You could also probably come to the conclusion it might be range bound. Whatever. But could you, right? Right? Could you come to the conclusion at least it's less bearish or less bullish? But if you came to the conclusion that the market now has made a lower low relative to this low, that's why I sold it. It's just a 1, 2, 3. Like, it's not complicated. It's just I see a lower low. Okay. High probability of reversal. Where do I want to sell? Previous support, because now it's resistance. Great. Trade there. Probably work, might not work, whatever. It's just a trade, but but the plan comes first. So you can see I didn't get it perfect. I sold a 382 Fibonacci retracement. I could have got a 50%. Who cares? Okay? So, oops. Whoa now. What happened there? All right. What happened there? Huh? There we go. Now I did it again, you son of a... Click. Just draw, all right? Come on, bro. Okay. You see, what is the potential that this projection occurs? I guess the 50% predicts this anyways. Okay, great. Which is also the monthly pivot. Great. What is it good? Is it modest or moderate? Is it low? Well, describe what you think the potential for this move to happen. Now, of course, we did this on Monday, but now it's Wednesday. But so you might have a stronger opinion. Right? Yeah, but that would be aggressive. The 382 is aggressive. The 618 is conservative. 786 is damn well almost didn't reverse at all. Yeah, and James says, you know, these can fail too. Of course they can fail because you're trying to reverse a bullish market. This same setup in a bearish market would be much, much, much better. So you don't want to get in the habit of standing in front of a freight train. So James brings up a good point. But if you're not buying, then at least maybe you need to be selling. Or if you're buying, you should be cautious of buying in this scenario. So if you thought on this 4 hour this was going to head down into this area like we did on Monday, then what should you be doing on smaller time frames? Probably looking for opportunities to sell. So now you got to do your technical analysis all over again. Kind of looks range bound at the moment. How do you trade a range? Sell at the top of the range or not at all? Because if you're a bear on the 4 hour, you're not looking for buys because your bias is sell side. So on this setup now, you're looking for opportunities to sell. Maybe you sell when the oscillator is overbought. Maybe you sell 5-8 crosses. Maybe you sell lower highs. Maybe you sell up in here. Whatever makes you sell. I think there are different sells opportunities that are better than others. But at least you're in a scenario now of deciding, do you sell now or do you sell later? You're not even thinking about longing. No, right? Which keeps you out of a lot of bad trades. Nuno says it would be prudent to wait for some sort of confirmation. Great. Great. That's called a decision. Right? So Nuno could say, well, let me get a drawing tool going here. What if it kind of did this? Would you look for an opportunity to sell maybe in here? If it looked like that at the time? Or plan B, if it did this now, would that matter? Would you look to sell here? What do you think, guys? Are either of these reasonable opportunities considering our analysis of the 4 hour chart? It's actually 2 plans, right? Yeah, now you're a professional trader. You're completely in control now. That's it. So you just planned out your day. This might actually be tomorrow. Okay? That's the difference between an amateur and a professional. Amateurs react. Professionals plan ahead. Professionals are in control. Amateurs are out of control. Feels good, doesn't it? And then let me zoom in here. Let's say you get faked. The market lies to you. So let's say you get this and you sell here, and then the son of a does this. How much money do you lose? That much? Cares? Yeah, Pete, 90% of your accounts. Well, Wayne told me! Wayne told me to sell there! So I gambled my entire net worth. Yeah, you lose the ante. Well said, James. But you got to see the flop. The flop is a 2, a 4, and a 7. You're like, fold. That's how it is. It's just another hand, guys. Yes. Well, but even if you didn't, someone else might. Right? So, dump it. So now you're getting it. It's going to be a long night. It's just a bunch of cards, guys. There's plenty of hands to go around. Just don't get short stacked. So, yeah. All right. Great. Da, 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 da. Triple top? What the WTF? Mexico? Dang. Yeah, the only thing, James, is in Forex, if you're sitting on 3 aces, you can sit on that hand for 5 or 6 or 7 rounds. Right? What if you got to keep your best hand of the night? Like, this is 3 aces. Well, and everyone else had to switch their cards or something, right? You just get to sit on that good hand until someone gets 4 aces, and then you're out. What was the question? Why the old FX Bootcamp video? Oh, Fibonacci training. You know, you could just take the basic training course. FX Bootcamp, it's not expensive. I can't remember what it was. Yeah. But I think most of you have been through basic training, so. All right. Look at this mess, huh? Now, correct me if I'm wrong, but I think we said look for an opportunity to buy in here. Right? For the weekly and monthly swing long. Oh! Son of a... Well, we were not the only ones. But that sucks. That's why they invented stop losses, huh? And then maybe that's why you shouldn't use Fibonacci in a range-bound market, so you get food. But still, I would always buy that. So whatever, didn't work out. Now what? Do you think that we might get some ups sort of in here? Somewhere in this zone? How are you going to play it, bro? Peter, oh, is it 79 bucks? Oh, well, Paul, the same reason you sold it a weekly M3. If you're a bear, you would sell here for sure. If you're a bull, you would buy it here for sure. And there isn't anything else. But you have a weekly buy, a weekly buy and a monthly buy. Okay, right here. Weekly M2, monthly M2. So it's a double buy zone. Right there. That's it. So I'm assuming if you didn't sell here, but this is the obvious sell. Right? Yeah, it's a twofer. So, Wally, you sold it up here. It's perfect. Perfect. Absolutely perfect. And if you longed it here, you can see we went all the way back up in here. You know, and any sort of weak bear could have jammed their stop and got knocked out on that. And then it dropped, right? So it could have gone up either way. It could have gone either way. So the question is now, what do you want to do? Well, we know if you hit this green zone early in the week, there's a high propensity for the trade to head north again. So if Paulie sold it up here, should Paulie get out? Maybe, maybe not. Okay, here's a great example, bottom left. Okay, let's do this. Okay, here are two examples going back in time here. Here's hitting the target early in the week. Here's hitting a target basically the same day, like now, right? Wednesday. So Paulie's got to decide if this trade could now turn against him. Right? So Peter says, technically we made a lower low. Yeah. Now you got to know when to stop your price action. Okay? Like look at this one here. It still fell pretty reasonably. Made a higher high and then still fell pretty reasonably. Here's one, still fell pretty reasonably. You know, these areas are there for a reason. So you could do your price action all you want, lower low, lower high, lower low, lower high, lower low, lower high. But if you hit a pivot profit zone, it tells you you are now risking the end of the price action. And even Elliott Wave would say get ready for at least a 3-wave correction. Do you want to suffer through the 3-wave correction, or should you just take profit in here? And then an amateur would say, "Well, but what if well, that makes you an amateur." Professionals say, "Well, it could fall another 30 pips, but either way, I'm already sitting on vast majority." If you're if you're sitting on 60 pips, and it might fall a little bit further to 90, but you also are risking giving up the vast majority of your 60 pips. So let's say you're in a situation, you've jammed your stop, so you've locked in 30 pips profit. You're sitting on 60 pips profit, and the next pivot is 30 pips away at 90 pips profit. On the long run, if you're in this scenario 100 times this year, what do you think the right decision is? Go for the 90, sit on it and get knocked out at 60, or take the profit, Go for the 90, risk getting knocked out at 30, or taking profit at 60. If you face the same scenario 100 times, what do you think? It's all the same. Just depends on how good the trade is, right? So if you always got out when you had the 60, then you trade less. You're not staring at this for another few hours or even another day. You've locked the trade in, which means now you're probably going to go find another trade. Most people stare at their current existing trades and miss out on future opportunities, either because they don't have dry powder or just because they're so focused on the trade they're on. So if you just got out, now you have the money in the bank, you can go find another trade. But let's say half the time you hit the 90 and the other half the time you get knocked out at 30. What is your average return over these 100 trades? The same. It's 60. Except you work less. You stress less. And you probably find more opportunities to trade a different pair. I call it the law of averages. But if you add in finding better trades, you actually probably make more money. Let's say you're the best daring trader on the planet. Let's say I don't know, let's say 75% of the time you hit 90, 25% of the time you get knocked out at 30. You're just a hell of a trader. What's the difference now? 15 pips? But you're assuming the risk. Do you really need it? It really makes that much of a difference? Okay, probably not. Just don't worry about it. Just take your profit and find another trade. So like just looking at the past here, look, you could have risked it, it went up. You could have just taken profit. Look, you could have taken profit or given a whole bunch back. Here you could have taken profit and walked away on a Tuesday. No, you had to sit on this all the way to Friday and maybe got knocked out at a lower low. Maybe you stayed long the next week, but couldn't you just find it here like a normal swing trade? And then look, by Wednesday, you're done again. Take your profit. You're done for the week. Well, Brandon, in that case, if you want to be a longer-term trader than a weekly swing, you would do monthly swings. You want to see the difference? Oh, see, can you see? Boom! Look. So I don't even know what is this, USD yen? check this out. This R1 predicts at the end of the month we'll stop at S1, which is here. Boom, shalaka-laka. That's 4 weeks, bruh. The R1, this is straight out of my book. The R1 predicts an S1. Oh, oh, yeah, well, we missed it by 4 pips. I'm sorry. We did hit it the next day, though. We're about 12 hours off for the month. Is that funny? A clown. What else is going on here? Check this out. This is S1. What does that predict for a monthly high? R1. You mean this? That's the projection for this month over here. That's pretty accurate. Now I know it's a whole day off this time. Yeah, a whole day off. Yeah. And then this R1 predicts this one, but this was less than a day off. Not bad. What are you going to do? You see this? If you hit your pivot profit zone early in the period, what does it say in my book is likely to happen by the end of the month? If you hit your month or week or, right, whatever the period. If you hit your target early in the period, what's likely to happen by the end of the period? It goes back to the central pivot. Oh, you mean this one? Dude, you should put that in my book. Oh, wait, I put it in my book 9 years ago. Hey, that's good to know. That's good to know. That's good to know. You know how many hours I spent writing down observations? Yeah. Yeah, Paul, I don't know where you've been, Paul. What's wrong with you, Paul? Gee whiz, Paul! Yeah. Paul just fell off his bicycle. He's like, wow, what? Paulie. We like 10 or 12 years ago, I had a boot camp member. I think his name was Paul, and he was from a small town on the side of the cliffs in South England or something. And he actually sounded like a pirate, like a real pirate, because that's where pirates were from. You know, where pirates are like, arr, arr. That's because they were all from that town. And I think you literally had to walk down stairs, like 50 flights of stairs all the way down to the town. There was no other way into the town. Oh, is that right, Paul? It was the same. Where were you 12 years ago? You're like, oh, I was trading options. Yeah. Trading stock options on dogfood.com. Cool, man. That'd be a good place to do a meetup. Okay, pig. Yesterday we said, hey, maybe this will be a good place to sell. Yeah. I don't know what you were doing at London Open. The day before we said this would probably be a good place to sell. Yeah, that was Tuesday London Open. Monday London Open, you would have sold off the 21. What about Nat Sherman's? Stacking this. Yeah. I'm overdue, man. Overdue. Look how old my card is now. I don't think they even sell these anymore. Look how worn out it is. I have a membership card. Gets me into the VIP room. I'm sure they'll still honor it. Look, isn't that funny? You probably just took a scan of it. Everyone's going to show up with Russian hacked versions of my barcode. Yeah, I'm here for my free cigar and the VIP room. Like, dude, Wayne, this is the 19th time you've been here this week. I haven't seen you in 10 years. Freddie boy, do I always? No, I don't always anything. So, for example, let's say you were waiting for this 5A cross on the hourly. Look how many hours it took. Okay? So, what if you're sitting here thinking 5A cross, 5A cross, 5A cross, 5A cross, 5A cross? How could you possibly get in a little bit earlier than waiting 5 hours? How could you get in there a little bit earlier if you were certain somewhere in here there was a more than reasonable chance this sucker was holding? Zoom in. Okay. How do you zoom in? Drop. How about to a 15? So let's say you had a rough night and you took this 5A cross and you put your stop, well, over the higher high, it would be here, or over this higher high. I guess you'd probably do this one, right? It's a little dangerous because it's a 618 and a pivot, so it could just do one of these things on you. But whatever, whether you put your stop here, put your stop here, you survived and you're in and you're fine. Now, where was the actual London Open? Let's see, 5 hours ago, 20. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Yeah, so yeah, you would have been fine. The 5A cross is exactly London Open at exactly the sell zone I did for you yesterday. So now you're sitting on it at the London Open, and it gives you a 5A cross when it's 86% overbought. Yeah, okay, you would have made money. Or do it your way. Do it your way. So right here it was 78, or can you see that? 86, is that 86? Yeah, my poor eyes. Oh, there it is. 86.26% overbought. Yeah, I've had more overboughter than that, but it's something. Are these starting? Is anyone kind of having aha moments where it's starting to click in? Just start, you're starting to see it, maybe not do it, but you're starting to see it. That it might actually be plausible that you can do this. Then I really, really sincerely hope you've opened an account at tradersway.com. Otherwise, you're just taking advantage of the situation. Being a lurker, that's just not cool. Yeah, no, demos just give us an opportunity. If you're not ready to trade real money now, that's fine. But let us earn your business. Maybe later this year, maybe later next year, you'll be ready. We just want to have your loyalty. Yeah, right on. It's all I'm asking. Give us a shot. Tell them Wayne sent you. Roll out the red carpet, right? Put your diamonds in the sky. Trader's Way, right there, huh? No, I'm not a partial owner. No. I'm just a concerned trader. Look at that. Whoa! Did it my way? Wow, huh? So that's telling us dollar weakness. So now, if you're a bull, this is a tricky buy, guys. If you're a bull, this is tricky. I think you're going to be better off waiting. This is tricky, man. So this also points to dollar weakness. Cool. No, that would bring dollar strength, but let's see. Yeah, big pop here. Ay, papi. Something's going on. Why so much dollar strength yesterday? Maybe because I sold these pairs. Maybe because it was supposed to. See, that's the thing. Like, most of this stuff isn't surprising. Sure, North Korea, blah, 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 blah. Great. Look at non-farm payrolls. So whether it happens today or not, you know what's supposed to happen after non-farm payrolls like that? This. Now, you can blame yesterday on North Korea, on Iran, on the Russians. Maybe the Russians hacked everybody. It just did what it was supposed to do. How or why doesn't matter, does it? And look at this. I mean, it's just so blatantly obvious. Right? I think I even set this up during non-farm payrolls. This is so plain as day obvious. Now, whether it works or not is never always known, but the plan is as basic and as simple as you can possibly get as a trader. Right? The lower low predicted the higher high, the lower low predicted the lower high off the former role reversal. This is basic price action. You would trade a 1-minute chart like this. You could trade an hourly chart exactly the same. In fact, you should. So like, why did it fall yesterday? Pick a reason, any reason, it doesn't matter. But I told you last Friday that it would do it. So why? I don't know, because I said so. Now, of course, that's facetious. I'm not that important. I don't have that kind of money. I'm a peon. So therefore, maybe a lot of other people had the same plan as I did. But isn't that my job? Well, I'm just saying, right? I was early. I sat on it for a day before it took off. You know, and I'm only up like 50 pips. Like, who cares, right? Well, 60 pips now. I mean, who cares, right? At the best point, I was up like 75 or 80 pips. So I think I'm going for 200 or 300, right? So like, whatever. It's not a good trade. It's not a genius trade. It's not a smart trade. I didn't outthink the market. I didn't outplan the market. I didn't out-hustle the market. I didn't work hard on it. I didn't put in like 19 scalps on it. No, you saw me. I think I sold it on Monday, and by Tuesday afternoon, I was up almost 100 pips. Well, isn't that what was supposed to happen? Like, if that wasn't supposed to happen, then why would I take the trade? Right? And now we got some sort of price action risk. Okay. Now I lose 1 pip if it goes against me. Well, wish I would have taken the 80 pips. But I think there's some more juice here, so why would I take the 80 pips? But now I got that cash freed up, and I can move on to another trade. Sweet! Right? So far we haven't broken our wimpy high, nor did we break our wimpy low. Yeah, it just means somebody's going to lose money somewhere, sometime. So, can you see the markup here? Let me add to it now. That's not what I meant to do. Sorry. Okay. It's pretty flat. Do you see it? So to go to a 4-hour chart, let's find a peak here. You should also worry about move like that, but we're a long ways away. I'm busy, Freddie boy. Yeah. Right on, man. Right on, Fred. Yeah, I don't know why it was so complicated, but did you start with the basic training program? Yeah. It's a good start, right? I mean, it's a good foundation. And you'll notice that, you know, there's an earlier version than that one, and that one is an old version, but nothing I do has really changed. Yeah. That's the cool thing. Like, I've been trading the same way forever. Forever. Well, at some point, Kareem, as world GDP picks up, you would assume demand for commodities would pick up too. And that would actually put the Canadian dollar strength. And then also as global GDP improves, you would assume that the US dollar weakens. So let's say in the next year, what is the highest the Fed could possibly raise interest rates in the next 12 months? Or even the rest of 17 and all of 18? Yeah, maybe 2, maybe 1.75, but let's just say 2, right? And I know Kiwi is at 1.75 now, but most likely in that scenario it would be 2, right? But let's just say if the Fed raises in 12 months to 1.75, New Zealand is already 1.75. So you could see that other economies would most likely start to raise interest rates as well, but I think most traders and investors would assume other economies would have a higher interest rate than the Fed. Now, the Fed went first, but as things improve, you could probably get a better deal. So, like, let's say over the next couple of years, if best case scenario for an investor in U.S. Treasuries is that interest rates go to 2%, couldn't interest rates in New Zealand go to 3% if they're already pretty close to 2%? Then you'd be better off with New Zealand. You see what I mean? So once all these other economies start moving, this is why we need to watch New Zealand. This is why we need to care about Aussie. This is why, how about Mexican peso? Oy vey. Right? So, you know, if you put your money in New Zealand and demand for oil goes up at the same time, Canada's going to benefit and the dollar will weaken, US dollar. So, pretty obvious bottom. And where are we now? Here. And I think this seems the most interesting. Funny thing is, if you notice, we've already done all these markups. So I'm going to do it like this. You know, I'm just going to clean it up on that. Kind of messed that up. All right, I'll have to clean this up. But I'm thinking this goes up to MR1, WR2. So we're looking at 128.50. And maybe I dump this. So let it go up another 150 pips. And at least start to be concerned as a risk manager. Gold is on fire. Dollar, look at dollar peso, man. Holy smokes. Peso's tanky. Well, that's the end of that trade, huh? Adios, peso. So we'll see them next month. See you in Sep, peso. Boy, we nailed that one, though, didn't we? Because I don't think you've heard me go, oh, this one probably won't work in previous months, right? Oh, this one's so bad, you should be cautious for 9 different reasons. This month I was, explained it all in great detail, and sure enough, this month it failed. I don't know about silver, right, Fred? I don't trade silver, but of course. So, all right, ladies and germs, peace on earth. May the pips be with you. May your profits be above average. And you want to circle back and regroup this time tomorrow? 7:30 in the a.m. in the NYC. Great. Well, thank you for being on my team, and I look forward to seeing you again tomorrow. Thank you for being a client of Traders Way. We appreciate you, and thank you to Forex.today for hosting. See you tomorrow.